Hello, in this lecture we will define fixed assets. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of fixed assets is tangible, long-lived assets used to produce or sell products and services, also called plant assets or property, plant, and equipment. When we're thinking about fixed assets, we're typically thinking about those larger assets, larger dollar amount, and those assets that will have a longer useful life, those tangible assets. And therefore, we are going to put those assets on the books as an asset rather than expensing them when we purchase the assets. Then we're going to allocate the cost of those assets over the useful life in accordance with the matching principle. Idea being that we want to match up the cost, the expense, when we expense it to the same time period in which the asset was used in order to help us generate revenue. Accrual principle, matching principle in practice. Example of fixed assets could be something like a windmill could be a fixed asset that we're going to use over a long period of time. A forklift, that's going to be something that we're going to put on the books. We're going to use it for a long period of time in the future. We want to expense it as we consume it, as we use that fixed asset. We also want to represent on the books both the cost of that asset and the idea that we don't really know what the fair market value is at this point in time, meaning we don't really know exactly what that particular forklift could sell for, but we also want to provide our reader with the book value of that asset, meaning it went down in value. We still have this forklift. We're showing the decrease in value on the balance sheet, book value being the cost less the accumulated depreciation. A factory or something like that, same idea. It's going to help us generate revenue in the future. We want to put it on the books as an asset, then depreciate it. If we had a tank that was helping us to generate revenue in a business, then of course the same idea, we'd be using that in the future, and therefore we're going to put it on the books and depreciate it over time.